Hello and welcome to today's NinjaTrader Ecosystem webinar event with Anthony of Verbal Journal Trading. My name is Tiffany and I am a platform representative at NinjaTrader. We have a very special event today with Anthony of Verbal Journal Trading. I'd like to mention that it is important to understand that there are substantial risks in trading commodity future contracts and forex. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited with your broker and can even incur losses beyond these amounts. Please inquire at the link provided for more information or for a copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation nor a recommendation, but simply education in nature. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage directly at the information provided. The NinjaTrader Ecosystem website is home to hundreds of third-party apps and services, all centered around the NinjaTrader platform. With new tools added to the site weekly, you can quickly search by a keyword or filter by mythology, asset class, and more. You'll find more information about the upcoming webinars in an on-demand video archive to view event recordings at the link provided. For up-to-date information, be sure to like or follow NinjaTrader Ecosystem on all social media platforms. NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. To ensure that you are on the latest version of NinjaTrader and pick up a free live data trial, please visit the following link. You could purchase or lease NinjaTrader at the following link. And if you are just getting started with NinjaTrader, we offer free live training on a daily basis. You can view a schedule of weekly webinars at the following link. We are very excited for this unique event in which Anthony of Verbal Journal Trading will discuss tools in which keep your thoughts on the charts instead of on your trading. Thanks again for your attendance today. And without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Anthony. Please take it away, Anthony.
Thank you so much. I'm going to share my screen, guys. Just give me a sound check. Do you guys hear my voice and now see my screen? Give me a yes, yes, and give me a second to pull the chat up. There we go. Very good. All right, let me do one other thing. Perfect. All right. So how many guys really quick have been to anything I've ever done? Give me a yes or a no if you guys have been to a previous webinar that I've done. Good, a lot of no's. So, and I'll give you my quick bio in a second and what I created, but this is the thing I start a lot of my webinars off with, and that is, when anger is the emotion that gets you confident, you're in trouble. And why do I say that? Because it happens to the best of us. What we're going to talk about today is how to miss less. I've been doing this for 25 years, 5 years in the pit, on the floor, and then 20 years in front of the screen. I'll go over that in a second. But journaling is a weakness of everyone, and it's not about journaling. It's about just documenting. I can't journal. I'm not a guy that's going to write notebooks and then read it. And so it's got to be practical for those who don't do it, and possible for those who don't, and practical for those who do. What is it, how, and why? We'll go briefly through it, and we won't keep this boring. We'll stop missing key support resistance levels that work. I'm going to tell you guys a couple common denominators that I've found are among every trader, retailer, professional. And then this year, do what you say. And if you don't, ... what does that mean? If you don't do what you say, that's fine. Just don't do the opposite. If you say you're going to work out this week and you miss a couple days, did you eat a bunch of chocolate cake also? Or did you at least eat right? And you didn't totally blow the day. Accountability is a huge weakness in this business. Now, my bio real quick is I was a CME clerk in the mid-90s as a kid, essentially. I became a Board of Trade member where I was going to make my millions of dollars as a pit trader. Couldn't even raise my arm and trade. It was so random to me. Ready to quit. And electronic trading was in its infancy, started to make the transition from the pit to the computers. If you guys remember, you've been around a while. This used to not always be on a screen. In the beginning days, we only traded European futures, and I got a job. I didn't know what a prop firm was, and I got an interview at a company, International Trading Group, northern suburbs of Chicago, and it was it's the professional venue of professional day traders, right? And so people, the Super Bowl's in a couple of weeks, and you know where professional football players play. You go to a stadium, and that's where they're at, what they talk like, what they think like, what they dress like. But where do you find professional traders? Where's that venue? And in the screen environment, it's prop firms. There's a big difference between a real prop firm and one that's not. And there's not a ton of them around. They're in the bigger financial cities. Point I'm trying to make is when I started in a prop firm, April 2000, this April will be 20 years, I wasn't allowed to make mistakes many people are allowed to make when they start trading on their own, which is probably most of you guys. And that is adding to losers, trading bigger than you should, trading a market you shouldn't, having big losers, no review, you don't have accountability. Hey, it's hard to have accountability when you're your own boss. And you got to create it, you got to document it. And by the way, I'll answer all your guys' questions. If I don't answer it in real time, I'm not ignoring it. I'll definitely set time on the side at the end. And I'm not one of those guys that have a ton of go on talking for hours. It'll be a short, sweet webinar, and we'll interact with some questions. And I'll get into what a prop firm is at the end, because that's important to know. So let's roll on with stop missing your support resistance. If you've seen any of my webinars, you'll get used to this image. That's me on the left. That's my dad down at the bottom. And my brothers and sisters. I'm not the tallest one, but I stand on my toes on all family pictures. They haven't figured it out yet. But why am I showing this picture? He used to tell me and us growing up, if you know how, you'll have a job, but if you know why, you'll be the boss. It always stuck with me because why you have support resistance, why you trade, why price moves, all of that stuff is missed a lot by people who are getting into this business or have been in it for a while. So if you know how, you have a job. He told us if you know why, you'll be the boss. So today, I want to talk about his verbal journal. It's simple, easy way to review, saves yourself time, fear less, you'll miss less, and you replace fear with confidence. The only way to get less fearful, and I got news for you. I've been doing this for 20 years. There are times I'm fearful. It's normal. Sometimes it's good. But you can't be fearful all the time because you'll miss too much. In a way to get less fearful, you got to replace it with something, and that's confidence. But how do you get confident? You got to understand and slow things down. If you can't fight and someone wants to fight you, you're going to be fearful. If you know how to fight, you probably won't end up fighting because you got nothing to prove and you're confident. All right. So first of all, this webinar and going over support resistance and how to document it and miss less doesn't matter if you don't know what this product is. Simply, it's the ability to document what you're doing with recordings on your screen. So a dialog box comes up, you title it, you hit record, and you tell the market yourself what you're thinking. And as soon as you do that and you hit close, a dot's going to appear where you clicked and the color you made it. Maybe it's a blue dot for bullish thoughts, a red dot for bearish thoughts, yellow dot for trading notes, whatever. So it allows you to start looking at a red light, green light system of yourself. Because a lot of people get caught up in indicators and they get caught up in, hey, it'd be great to have red light, green light stuff. If I got started and didn't get into a floor or prop firm, I might get stuck into that or sucked into that. But at some point, you got to chart yourself and understand I'll talk about that in a second, Chase, but, and understand what you're thinking and when you're thinking it. Now, how do you use it? This dialog box, someone just asked the record button and everything else. When you open it up for the first time, you'll see a record button. When you go back to listen to it, you'll see a delete button in that place. You put a title in there. You guys could see my cursor, I imagine. You put a title in here, you hit record, you choose the color, you choose whether or not you want to draw a line that comes out from it. You choose your mic, if you have multiple mics hooked up. And you hit record and you start talking. You hit stop, you hit close, and this dot will appear wherever, again, you originally clicked. Also, what's neat is that you're not going to have 36 titles. You're probably going to have 6, 7, or 8. So once you do one, it saves it in this drop-down menu, so you don't have to keep typing your title. It'll be saved, and you just select it and saves yourself a little bit of time. I'm going to show it to you on a live chart, Oscar, and anybody else wondering how it gets pulled up and all that functionality. Well, it's pretty simple. to use, and it has to be in order to use it. Now, what's the important part of journaling? It's trying to find and document and create a higher level of accountability and fill that weakness. So one thing I've learned in this business is that everyone has some semblance of support resistance. People come up with them for different reasons, but everybody pretty much has a line in the sand. Support resist, and a lot of people don't know why they might be support resistance, or they know why, but they don't know the dynamic that makes them work. And I won't dig deep into that, but everybody has support resistance. And the problem is they miss a lot of the ones that work and they catch a lot of the ones that don't work. And you need to know why you're missing those that work. You need to know why you're taking certain trades, whether it's in real time or that day or an hour later, and document what you're thinking and what you're looking for to qualify that level. All right, so everybody has those lines. And you're not supposed to trade them all. And that's the I don't want to call it surprise that people will get when they get into this business is they got to buy green support and sell red resistance, and they could put orders at either one, and life is good. It's not going to work that way. You got to qualify and disqualify, right? And maybe you use different colors on this verbal journal to distinguish the difference in what you're thinking and why you qualified it. Or why you missed it. What kind of fear did you have? Here's an important element of why they are this support or resistance. I got to draw this. I can't do a webinar about support resistance without talking about this. I got to do it. So let me do it with some drawings. If you have a support line down here, and everybody could see this yellow line, correct? Hold on, I got Alexa yelling at me. Sometimes I have such a bad day, I get in a fight with Alexa. You know you're having a bad day when she starts yelling at you. So you got this yellow support line, right? Price is coming down to it. You can't, like I said earlier, you can't just put a bid here. You're going to get filled, and when it works, life is good, goes up, and you make money. What happens is, and you guys know this if you traded for 5 days or 5 years, you put in a bid to get long at support, and it comes right above you, and then goes, and you miss a lot of those. You miss a lot of the winners because it doesn't come exactly down where you wanted to get long. But then when it doesn't work, guess what? You get all those, don't you? Fires right through you, so you catch all the losers and you miss a lot of the winners. That's why that's not going to work. That whole just put a bid on support in red or an offer at resistance in life is good. So the dynamic of why support would work to help you miss it less. And you use its verbal journal to help you understand the fear and the qualification process. But also put down, when you have support, when I use support, I call them edge zones, and they're simply where the tempo picks up. So if back in here, earlier today or yesterday, whenever, the market got fast to the upside in this circle, it'll put a line across. Now, that's not part of this verbal journal necessarily. I mean, just explaining why good support is good. What happens when the market goes fast in a certain area? Who missed? Buyers or sellers? Probably buyers, right? Sellers didn't miss it. They could sell it higher. Buyers missed it. I don't know about you guys, but anytime you miss something, you're anxious and you're dying to buy it if it indeed comes back, gives you another chance. If it comes back and gives you another chance. Well, guess what? So is everybody else. So if a lot of people miss buying it, there's a lot of people that might be trying to buy it the next test or a couple tests to that area. That's going to be your best support, especially if you could start to distinguish that the reason why they want to buy it is because they're short from below. If you don't, even as a verbal journal webinar, if you take nothing else from this, take this. After you sell it, you're a buyer. After you sell it, you're a buyer. What does that mean? When you sell it to get short, you have to buy it at some point to cover that position. Might be in 5 minutes and might be in 5 days, depending on your time frame, but you have to cover it at some point. So shorts have to buy, and if there's a lot of shorts that get stuck in a certain area that you get better and better at identifying, that's going to be your best support, because they have to come and they have to buy it. And if indeed, let's erase some of this. If indeed the market at some point in the past moved fast in here, then that whole notion of shorts missing the cover creates a lot of what I call baby birds that are dying to get out that support or right underneath it. They're telling God they'll never make this trade again if you just let me out this time. So that's why support is good when it's good. Let me tell you the baby bird story, even though I don't have pictures. Baby birds are in a nest and they're helpless. So are stuck traders. If you're short and you're bidding to get out, you're begging to get out, you're helpless. Mommy bird's got to come and feed you. That's price. She's close to giving you your fill, and a hawk comes by and rips her head off. No worm, no mommy bird. Price goes away. You didn't get filled, you're still stuck short. That's why price goes away, because all these shorts are jumping to eventually buy it. That's one of the key dynamics of why price moves. If you don't know why price moves, you ain't going to know why good support's good and everything else. All right, so think of baby birds when you think about stuck shorts, and that's going to create great support. We're just staying on the support side for example's sake. What happens to baby birds after this goes on? If they don't jump up to grab price, they fall down to the street and a car rolls over them and they're gone. That's someone's account blown up. And this happens over and over and over again. The faster the market, the more people are getting stuck. So I want people to start thinking about how other people think in the market instead of always what you think is going to happen. Document what you think is going to happen based on what your feel and your read is on where trap traders are. So I've never heard that explanation. Hopefully that clarifies good support or good resistance. And I didn't plan on bringing that story up, but I think it's important when we talk about support resistance and using the verbal journal now to document if you're reading those sequences and those situations. And again, you could put lines like I'm going to show you with a real ninja chart on the chart, not just dots. And you could color those lines what you want. Another big weakness in this business. Number one is, again, why markets do what they do. It's not doing what you say you're going to do. Very little accountability and the hesitation. If I'm trading poorly, it doesn't matter. I've been trading 20 years. I'm going to trade poorly at times. It's because I'm hesitating. And when you hesitate, I don't care if you're a long time frame trader, short time frame day trader, or anything else in between, you're overthinking and you're not going to be trading at your best. You got to know why you're hesitating in real time. Not at the end of the week, you go back and you look at your charts and say, I missed this, missed that. Well, why did you miss this and that? If you're explaining it to someone else who might be your boss, do you have a good explanation? There's nothing wrong with bad trades. There's nothing wrong with losing trades. But they have to have reasons attached to them. So you have a chance of minimizing bad trades. You want to minimize bad trades, but you want to welcome losing trades. That's all part of the game. Everybody else who has another job that has to drive somewhere to that job, you have losing trades for that job. It's called putting gas in your car. If you run a business, it's called paying your employees. That's trading losses in trading. Cost of doing business. You just want to minimize them and understand they're part of the game as long as they're the ones you're supposed to take. So often you got all these trades during the course of a week or a month, and it's just Legos all over the ground. They're not even put together. You got to start putting them together, and it's not that hard, especially with a tool like this. And like I said earlier, you're not going to get rid of your fear unless you replace it with something. And you're not going to get confident unless you have a better understanding of why you're doing stuff and why your read is good and when it's not. Here's a dangerous path to be on. When you think it's the right path and it's the wrong path. Or when you think you're on the wrong path and actually you're doing good stuff. And it goes back to, what are you thinking? When I've done coaching sessions with people and I force them to use the verbal journal as part of it, they're enlightened by, I didn't know I was thinking that, because we're reviewing something they might have done last week, but they documented it with the verbal journal in real time when they had the thought or the idea or the trade. And they're like, wow, I'll often tell them tell me what you were thinking. And they'll say it, and then they'll play the recording and it's different. You got to start charting yourself. You're not just trading price. You're trading yourself more than you're trading price. There's a lot of great strategies out there. It's people that screw them up. And so how do you get better at reviewing and accountability and everything else? You do it with practical review. Now, if I had to journal everything, wouldn't do it. That's me, though. There's some people that could write and they're great. But usually the time someone starts writing a journal, by the time they're done with the paragraph, they forget why they started it. And then are you going to go back and read all of that? No. Are you going to be able to take those words and throw them on the chart to see relevant to what was going on with price when you had that thought? No. So it's good, don't get me wrong, but it's more important to see yourself on a chart. And now those dots become your thoughts and maybe your trades. And there's a few different ways to go about using this. And there's some videos on YouTube that are very short that I'll lead you guys to, that'll cover a lot of that stuff. I just want to give you an outline and structure on how and why it's important to document what you're doing, especially when it comes to support resistance. And that's why I kind of angled this event towards that, because everybody uses support resistance. Some are better than others, but you can have the best support resistance in the world, but if you can't qualify it, it does you no good. You're better off being a great qualifier of bad support than not reading real time with good support. And for good support to work, and when it works, it's because it has that baby bird dynamic attached to it. Every time you see a market do this, from now on, there were probably baby birds stuck short to create that rejection. But maybe you know it in here or in here instead of waiting up there. I got 4 kids. Youngest is 8. He could tell me, hey, Dad, market's strong up there, because he's seen it come from down here. He ain't going to be a good trader at the age of 8, because when he's wrong, he's going to go cry to his mommy. 15-year-old might think it's strong in here, but it isn't until you're good at calling possible rejection and knowing where you're wrong before it's too late down here, being okay with being wrong, being okay with making decisions as a diligent reaction instead of just emotional. And when you're emotional, get it off your chest. That's what this verbal journal is about. You got to get stuff off your chest. I'll give you guys another example. When talking to a guy that it was doing a coaching session with, as a matter of fact, and I don't do a lot of those because I don't, when you do a session with someone and you're not into it, it's a disservice to the guy paying for it. So I minimize how many I do. And that's not what this webinar is about. The example, though, is, and the fact that he says to me that, some days he's tired and some days this or that. I said, you know what? You're good at using this verbal journal. Every day you wake up, tell yourself how you feel, how many hours of sleep you got, anything. You got in a fight with your wife, girlfriend broke up, whatever. Because one thing the owner of the prop firm told me told us when we started, we had a meeting, he says, listen, you're not just trading price, you're trading all day long. You're trading the emotions you have from last night with your wife. You're trading laughter and you're trading jokes. That's what we're doing all day long. We're just doing it more directly with these markets. So it all matters. So this guy starts doing that. And he says it's remarkable how much better he trades when his dot at the beginning of the day indicates that he had a good night's rest. Something simple like that. I am, Vic, yes. Something simple like that is what's important. Because if it ain't simple, you're not going to continue to do it. And most people don't. So let me bring over a chart. And I don't have yet on NinjaTrader It's coming out actually within a few days. Support resistance that we call edge zones that'll automatically draw them on the charts. But again, that's not what this webinar is about. I'll show you a screenshot in a second. But let's say, for instance, you want to make a note. There's some notes on this chart already. But let's say you want to make a note. You hold down Control, the Control key, and you left click. Now, where you click is where the dot's going to end up, being. And let's say you had good resistance and it's already drawn on here, but you missed it. You missed the little head fake, whatever the reason is. You missed it. Hold down Control, left click, and this dialog box, like I showed you earlier, will pop up. Your missed trades, make them an ugly color. There's the color that's going to come out. You want a line drawn on it, you check this box. If you don't, you uncheck it. You have your pre-loaded titles, like I said earlier, and you go missed. And then you hit record. And you say, you know what? I seen this head fake come in, but I had 2 previous trades that were loser and it affected this trade and I didn't take it. And you can go on and on from there. You don't have to make a 2-minute video or audio recording. You make it 10 seconds like that. You hit stop and you hit close and there's the line with the dot and the color you selected. Now, if you want to play it back, you hold down Control, you left click, and there it is. In fact, I could share audio and we could listen to it together. You hit record and you say, you know what? I seen this head fake come in, but I had 2 previous trades that were loser and it affected this trade and I didn't take it. And you can go, did you guys hear that? So this dot and this line is saved. And it'll also appear on any other ES chart. This is an ES chart from obviously the March contract. If you want it to appear on other S&P or ES charts that you have, it will. If you don't, it won't. So maybe you have different time periods that you want these dots to come up and some you don't. And so we go listen to. This actually happened this morning where was a pre-market thought. And I'll make them red if I don't often have an opinion coming into the day. I really don't. If I do, I'll make it red. If I have a bullish one, it'll be blue. And if it's a bearish thought, it'll be red. It doesn't mean it opens and I sell it, life is good, but just a pre-market talk. Hit Control, left click it, morning briefing, play it. Hey, you got this coronavirus, kept the market a little weak yesterday, closed on the lows. We're going to gap open lower. Watch the open in this reaction. We open drive higher or lower and see what. All right, so I stop it, and that was my pre-market thought, and you should have yours every day if you have one. And here's a way to use that is, let's say you have some levels that you want to play and you're bullish. So you want to play more what? Your support levels. You're bullish. Why are you bullish? And you go and you look and you go, every time I have a blue dot to start the day, I'm usually right. But son of a gun, I'll be bullish. And the next thing you know, my first trade out of the gate's a short. How many times has that happened to you? Where you're bullish and the first trade, 10 minutes later, whatever, it might be a short. And you'll start to see that, wait a second, I'm usually right when I have a pre-market opinion. And it'll give you confidence to replace that fear because you documented why you were, not only that you were bullish, but why you were bullish. Or maybe your pre-market opinion is terrible. So stop wasting time creating one. But document how or why you think it's bullish or bearish, and then go and say, am I paying attention to the right drivers? It's another missing piece to a lot of people is the simplicity of what's driving the market. This coronavirus in China for the last couple of on Friday, we didn't know this coronavirus or anything about that it would be a driver. There's been a lot of opportunity from it. I'm not excited that there's opportunity and people are getting sick and dying, but it's what's moving price, and that's your job. That's our job. Trade price, know what's driving it. Know what might drive it out of this impeachment. U.S.-China trade drove the markets all of last year. Know that coming in every day. And then go back to say, am I really focused on what's moving the market, or am I missing that? Because that's what's important. And a lot of people miss it. We also had today an opening drive head fake. Here, let's just play it. Opening drive higher, but it was a head fake as it came right back. Market got weak, and it was great recognition. So today, and this isn't hindsight stuff, I do a live room where I'm talking to guys and giving real-time objective opinions as to what's going on and where to be careful. We opened up, gap open lower today, rallied, came right back. Looked like it was going to be an opening drive higher and a gap open lower. And you guys don't have to know much about what that is. Some of you do, some of you don't. All it means is a head fake where everybody gets bullish and it comes right back down on a bearish day. This is likely. Again, does that mean I sell it, put my feet up and buy it down in here? Of course not. But I got an advantage understanding in real time what the probabilities are. And then go back to say, are you reading it correctly? Where are you making mistakes? Here was a trade, and I put this color because I don't like this color. And I don't want to see a lot of this color like I put the missed trade in here. But this was a missed opportunity in here on resistance that I had on another chart. Let me play it. I missed this breakout. I knew we had several rotations to this 07 half area and worked this great resistance. The problem was this fourth or fifth rotation just missed the breakout. You had sellers come in, couldn't get it to go lower. Obviously didn't get caught short, but missed the long. And so I was bullish looking for a breakout, didn't take it. I missed it. Didn't get caught short because I seen a breakout was possible. But again, did you hear the inflection of my voice? And you'll learn from that. You know, one of the things I did a long time ago is I had a video camera over my shoulder in 2001. And I still got the tape where what I learned from that was, first of all, I was going to go back and play the whole day because that's not practical. And you're not going to do something that's not practical. But what I learned from it by listening to myself trade as I'm watching the markets is that how emotional I was and what I was missing because of that emotion. So when you're mad and you swear normally when you're mad, swear into the mic. You're the only one listening back at it. Get it off your chest. Because if you miss a trade in here and you don't document it, but you know you missed it, you're going to do something stupid later on. The next trade after a missed good trade is usually a loser and ill-advised. You start buying it up here, you get shook out, and then it rallies. So instead of catching this and making money, you caught it this time, lost money. You were long both times, but your location was poor. You got to at least know when you miss something so you could put a proper check and you're careful on the next trade. Like if you'd have caught this trade, you wouldn't even have thought of taking this trade, but you did because you missed. Happens all the time. And a lot of times it happens and you know it. Other times it happens and you don't know it. It's like I said earlier, you're on the wrong path and you think it's the right path. You got to have better recognition. So when you have your support resistance, it doesn't have to be created with these verbal journal dots. You could have your red lines and green or blue lines for your lines in the sand, and then you put notes around them as to why there's support resistance, and then what you did, what you've seen down there to be able to qualify or disqualify it. I like, when I get into potential support, I like there to be, like I said earlier, not just rejection for another test, but also a lot of selling, and it can't go down. So for example, that's one of my favorite qualifiers. If I want to buy it, again, I don't just put a bid down in here and hope life is good and it fills me and goes straight up. I'm looking for something in here that shows a lot of selling coming in, but price can't go down. You punch a guy in the face and he doesn't flinch, I'm running the other way. When the market punches price in the face with selling, you don't want to sell it. It's too late if it works. Selling should make price go down. If it doesn't, that's a head scratcher, an eye opener to qualify and give you more confidence as to where and when to pull the trigger. Because a lot in this business is ready, aim, and then what? A lot of people are weak on the fire. I got the gun, I got the deer lined up, but I can't shoot. What does you no good? Sometimes people's ready are bad. Their aims are bad. The fire is good, and that's not. You got to have that progression. And then you got to know when you're not trading well. Or I'm not necessarily trading well, but missing one of those. Are you bad at just getting ready for that particular setup? Let alone being able to have the confidence to fire. Let me pull over this image of these edge zones that I actually lose. It's not ready for Ninja, but will be in a few days. They're called edge zones. Again, I don't want to make this webinar about these, but these are levels that when I said earlier about when the tempo picks up, when the market goes up fast, it'll throw these greens across. When it goes down fast, like previous day here, it must have went down fast, threw this red across, worked as resistance to come out or come off. As it tests it, it changes colors. I talked about earlier selling and it can't go down. That's this instance, and you see a red edge zone, price can't break. Now, you know price already rallied after we look at it. That's the easy part. But in real time, could I say, hey, listen, if I'm bullish and I see selling come down, that's my fire moment. That's my, hey, can't go down, starts to creep up, take a shot. And you got to be bullish, and there's got to be more in the progression than just that. But that's the qualifier, reading order flow and having better support resistance levels than just moving averages or Fibonacci or value area highs and lows. All that stuff might be great, but you got to qualify it. And you want some semblance of stuck traders to create the dynamic of after you sell it, you're a buyer. And you guys know that after you get short, a lot of people have their strategy runners in that throw in what? When you get short, you throw in your bids below for hopefully a profit and your buy stop above for your exit with a loser, right? You're a buyer either way when you're short. You just don't want to be short with a ton of people. It's be hard to go down. If a lot of people are short here, then there's a lot of people doing what with their automatic bids going in the market? They're all putting bids below. If there's a lot of bids below, it's hard for price to get through there. And then what happens is these bids below, just like you guys know that have traded, you start getting anxious, you screw it and you buy it. Screw it, they buy it and they buy it and they buy it. And then that's what creates the upside. And so that's why I said, if there's nothing else you get from this webinar, it's understand the dynamic of what makes price move. And it's not people getting in, it's people getting out or trying to get out. That's what moves price. And it's not the people that get filled, it's the people who want to get filled. Just like a house. 3 people want the house, only one gets it, but the other 2 are influential in where and why price went up. Correct? Same concept in the price of the S&P minis, crude oil, the stock, options, houses, plane tickets, cars. They all have price attached to it. They all adhere to the same concepts and techniques that allow you to value it. And order flow is a big part, but most people that learn order flow, because it's a popular buzz phrase, and it's a popular thing out there, and everybody in the world has add-ons for it, but nobody gets around to the right question about order flow, and that is when selling comes in and it doesn't go down, why isn't it going down? So I start telling people, forget about the right answer. Start looking for the right questions. Why doesn't it go down? And it should. Well, how do you know it should? Because there's all this selling that's getting absorbed. And now these guys, when they exit, create the bounce. And oh, by the way, you might have had some support anyways, predicting that bounce, right? You might have had a market or volume profile set up that wants to get you long. How many people in here understand a little, a lot, or anywhere in between profile? Market profile, volume profile. How many people in here have studied it and know a little bit or a lot about it? Give me a yes. So just like I predicted, a lot of yeses light up. There's nothing wrong with that. It's a great tool to understand the whole auction market theory. I see a lot of familiar names in here. John, how you doing? So you got a great theory, but one of the weaknesses, while it gives you the ability to create a decent opinion as to where price is going, it doesn't give you good location to execute that opinion. I'll say it again. It gives you a great idea and a bias and opinion as to where price might go, but not a great entry location. So you could be long profile, and it's bullish, and your locations may be poor, you get stopped out, shook out, and then it goes. You were right and you lost money. There's nothing more frustrating in life, let alone trading, when you're right and not only you have nothing to show for it, you have less to show for it. You want to put yourself in a position to be wrong and make money or not get killed every time you're wrong. And that's all about location. And when you do this, you execute your profile stuff. When you execute your profile and you do some of these things and you're in bad locations, document it with something like the verbal journal. All right, so how do you get it? And I've done something because it's been out for about, I don't know how long. What I wanted to do is, this doesn't have the appeal like a red light, green light, buy it, and a lot of people jump on it. Once they get it and use it, it has changed a lot of people's trading because they're now documenting their behavior and the behavior of their support, their resistance. So I just want to get people to use it. So is there a lifetime license for $500? Yes, but you're not going to pay that. I used to do it for $47 a month. People would get it, and some would, some not. I want to make it a no-brainer. There's a button on the verbaljournaltrading.com website that's $100 for the year. That's it. If you keep it, it's $100 next year. If you use it for a month, well, it's still $100. You'll have it for a year. So it creates a no-brainer for people to get it. And it'll work and function just like I showed you here today. Ways to use it. I don't want to take a lot of this time to do that because I've already made short videos on the Verbal Journal Trading website, or it's on the website too, where there's different ways to use it and ideas to use it. But create your own colors. All right, Marcel, glad you like it. Let me give you guys the link for it in the chat box while I go to the last page. If you got questions, pop them in there. And I want to answer some questions from before. Let's get rid of all these drawings. I'll come back to this chart if you want. Let me add it into the chat, and then I'll go through some questions here. This takes you right to that page. This page right here. And this button's not going to be here Sunday at midnight. I'm going to put that on this slide in a second. You got time to make your decision, but like a trade, you either take it or you don't. This ain't a sales technique, it's a trading technique. It's not per month, it's per year. I don't care if you use it for 3 days and you say, I don't like it. Well, you got it for a year, but you will like it. There's not really to like about it. This is the page that link will send you guys to. You got to fill out. There's no discount. It's already embedded in here. You got to fill out this information like you would for anything else. You'll get an automatic email that comes back to you with the instructions to load it on a Ninja. You guys are mostly all Ninja users. It works for 7 and it works for 8. Just make sure you use the right file for that. You'll see that in the instructions. People are still on 7. I'll give it to you for both. And if you got any questions, email, and we'll make sure you're set. That's it. $100 a year, unless you cancel and you only pay $100. That's your max risk. Let me go over it again so everybody is clear because someone's asking, what are they missing? The promotion is for 7 and 8. You're not getting a lifetime license. If you want a lifetime license, it's $500. You could still do that on that website. And I spelled license wrong, right? Oh, maybe not. Good thing this isn't an English webinar. So what it is, it's pretty much 80% off. It disappears Sunday night. It's $100 a year, unless you cancel it before your year is up. Again, limited time Sunday. That button that you see on the verbaljournaltrading.com website goes away, and look in your chat box. what's important is, just like a trade, you know where your risk is, and it becomes riskless. No, they're not. Thanks for asking. So the edge zones I talked briefly about have nothing to do with this as far as being included or anything else. But thanks for bringing that up, Keith. Very good question. Where are the voice recordings stored? They're stored in a WAV file, as a WAV file. So that's how they could pop up on other charts that you have the verbal journal on. As long as it's obviously still on Ninja. But it doesn't have to come up on every, let's say S&P chart. S&P recordings will only come up on S&P charts. It'll come up as many S&P charts as you want it to. You just have to load the indicator, so to speak, on that chart, which is pretty easy. And you could delete them, or you could scrape them and you could put them in a different file. You could scrape them down and put them in Dropbox, but it doesn't chew up much memory at all. And it's not like, again, it's like a sweet spot of anything. If you got too many support resistance, it's too noisy. If you don't have enough, you'll never be able to trigger it. So it's just like journal and thought entries. You don't want too many, but you don't want too few. No, Gene, just this one. Barry, you're welcome. Email. Now, there's a good question I had earlier that I want to go back and look at because it is relevant with the prop firm question. All right, Michelle, you're welcome. Let me see if the guy's still here. About who asked the prop firm question? What is it? Because it was a good question. All right, good. Real quick, a prop firm, and this is important for anybody. If you think you know what a prop firm is, you might be right, you might be wrong, because there are some that say they are and they're really not. The prop firm is, you don't necessarily, the ones that I know of and the ones I was part of, I didn't have to pay to get hired. They invest in you. And so they back you. And you go to a physical building, workstation, and they fund your account, and a profit split's worked out. For me, and the general contracts back then were 50-50 for 3 years and like 72-28 after that. But what you do is you're in a building with other traders, and you have impromptu meetings, you have scheduled meetings, you have classes, you have, whether it's twice a week, 3 times a week, every day. And it's essentially the venue of professional day traders, because there's an incentive for them to want you to make money, but they're taking the risk. And a good prop firm doesn't put a lot of pressure on you to make money in a month or two. Now, I'm telling you guys this, not to go out and get hired by one, because that's not practical. But it's the way I started, and it's the venue, where you're around guys that are doing this for a living, guys that are trying to do this for a living, and it fills a big void out there and weakness where people don't have that accountability, don't have that touch, and oftentimes they get involved, or they get into, I don't know, communities, or I don't want to say forums. There's some good forums out there, but that's not always great community. It's okay, but you want to be, at some point, have some sort of relationship by talking and listening, not just typing and texting and emailing. And that's missing. So at the very least, you're talking to yourself and you're listening back to your thoughts. What I would tell everybody, and it has nothing to do with this verbal journal, webinar, or anything else, is get yourself quality trading buddies who that you have a relationship with, and they are willing to tell you suck, not because they hate you, but because they want you to get better. And you get a lot of stuff when it's chats and things like that, and people want to flex their intellectual muscles and tell you how smart they are, and they're quiet when they're wrong. Hey, listen, you want someone to tell you they're wrong and why they're wrong when they have an idea. And if they're bearish, If someone's bearish down in here and the market rallies up there, they're not quiet. They're wrong before it rallied all the way up there. But if they're short or bearish down in here, they're okay with being wrong. That's good help. And again, that's what proper journaling and documentation will allow you to do. Is I didn't know I was thinking that. I can't believe I said that. Look how mad I am. Listen to how emotional I was. And you don't get that just from writing it, and you certainly don't get that from reading it, but by listening and talking, you truly get it off your chest. support@verbaljournaltrading.com is the email address if you got any other questions. If there's any problems, there really shouldn't be because it's been out for a while, but you never know. It is but you know, it's not about the problem. It's always about the solution. So any issues, you email that support@verbaljournaltrading.com. It's pretty easy to load, especially if you've loaded other indicators on NinjaTrader. The instructions are pretty tight, step by step, painless. If I could do it, anybody could do it. But it's another dimension of trading that's outside the box. You want to do everything everybody else is doing, be my guest, but it's a high failure rate in this business for a reason. Usually guys are going down with the herd in the wrong direction. You guys are in pretty good shape. Most of you, I would assume, are on NinjaTrader. They've been around a long time. They got a solid platform, and I've had a lot of success with this working on that platform. That's why I know it. All right, Nathan, my pleasure. Glad you liked it. There will be a recording, and they'll let you know. I think they upload it to YouTube, Carlos. And everybody in attendance is going to receive, I'm told, oh, you guys could see that, an on-demand recording for today's event. So, Carlos, you'll get it right in your lap. And let me put in my email address for this. Another area that this will help you is the biggest weakness, and I said it, missed trades, missed opportunities. How many times you missed the winner, and what do you do on the third trade? I ain't going to miss it this time, and that's the loser.
Okay, Anthony, it looks like that was the last bit of questions. We are going to end the webinar there, if that's okay.
That's perfect. I was just wrapping it up, but thank you. You guys did a nice job.
Perfect. Thank you so much. Perfect. I will go ahead and do, excuse me. Everyone in attendance here today will receive an on-demand recording of today's event, so just keep an eye out for that email. NinjaTrader ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find value in these events, we hope you will attend them on a regular basis. You can view all upcoming and past webinars at the link provided in the room. We would also like to remind you the information provided in this was of verbal journal trading and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spend with us. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from NinjaTrader ecosystem, and again, thank you so much, Anthony.
My pleasure. Thanks, guys. Good luck.